What's up, everyone? This is Jack. This is going to be a quick bar-by-bar review for the S&P 500 futures contract for today, Friday, August 21st, 2026. Here we go. This is my end-of-day chart markup here. You can see high probability and low probability trades that are in alignment with the trading system that I've researched and developed. So you can study that there if you'd like to. Starting with the monthly chart, I think is interesting. You know, we're in a permanent bull trend, right? And what's happening now is we keep breaking to new highs and finding aggressive sellers. You know, we broke to a new high here, pulled back over the breakout point, new high here. We got a pretty strong sell signal bar, new high, new high, new high. You know, what do you think is going to happen up here? Well, we tried to pull back for a couple of months and we found buyers around the lows every time we did that. Now we're breaking to a new high, and we might find sellers up here that drive us down to these lows again. So it's possible that this month turns into a doji bar or even a bear bar. You know, we still have another week to go in the month. And then on the weekly chart, we had a tight trading range, and we're breaking out to the upside. But we didn't get very good follow through on the breakout, and it looks like the market is trying to pull us back into this tight trading range. And that's because this is an area of agreement. Everybody thought that this price was fair, so therefore, you know, it's not as cheap as the bulls thought it was. And that's why we're being drawn back down into that price level. So the end of the week, we closed a little bit below that breakout point. This is the full-size contract. There's a slight difference in price between the micro contract and full-size contract. But on the full-size contract, we have a close that is a little bit below that breakout point on the weekly chart. And here's the daily chart. So daily chart, I thought coming into the day, you know, minus that bar that represents today, I thought it was reasonable to expect sellers above these highs and probably buyers not that far below, but we may accelerate down and close this gap on the daily chart. We have a breakout to a new all-time high, a tight trading range, a test of the highs, and now we're getting a bear breakout down. We have two legs down, and we have late strength in the second leg. And, you know, most of the bars up here have been bearish. So that increases the odds that whatever pullback to the upside that we get, we'll probably find sellers. But make no mistake, you know, with whatever sell-off we get, there will be buyers. You know, we had a big gap down and follow through right here, but we had a big gap up on the following day. And now we're gapping down, and we got good follow through, but odds are we'll probably find buyers at and below this bar and try to test up into the upper part of the range of the bar. We had a big gap up on the open, and because that happened, I think it was likely that we would try to get above the high of yesterday, and obviously it'd be likely that the bears would try to get follow through in the direction of the prior bar. So that means that it's very likely that today, like most days, will be some sort of trading range day, and probably you know, a trending trading range day. That's the most common day type. 45-minute chart. I'm not sure there's much to discuss. It's terribly relevant. But anyway, let's get into the 5-minute chart. Thanks for your patience. Hopefully you can see this all right. I'll make the bars a little bit bigger. So it's hard to see it, but we have a gap up that is as big as 80% of the average day's range lately. And the first bar of the day is a big bear bar, 12 points. It's not that big relative to some of the days we've had in the past few weeks, but it's big enough that it's a good indication that we're probably going to try to test the magnets below. What magnets below do we have? And you know what? Give me 1 second. There's another. That's better. So this purple line represents the breakout point from the most recent breakout above the all-time high. This is the old all-time high. And you can see that yesterday, every time we got to that price level, there was a reaction. And then finally, the market sold off below it. Well, now we have a big gap up, and it's no coincidence that the open of the day, at least on the micro contract, is right at that price. So clearly an important price. We have a big round number, 7,700, but I think this price is much more important. And I think it's meaningful that we're selling off from that price. I think that's a good indication that institutions are watching this area, and a lot of them are selling based on the selling we had yesterday and now the selling with bar one. So that makes me think that we're probably going to pull back and get a second leg down. It's possible that the bulls see this as an opportunity to buy a pullback against the gap up, and we'll test up here, but better to wait. And then bar two is a bull reversal bar, but small, increases the odds that we go sideways to down. Still better to wait. And then pull back and some more follow through for the reversal, but looks weak, looks like a pullback to me. So I imagine bears are going to be selling here and scaling in higher, but dangerous. We have a big gap up. It's not clear if we're always in long or always in short. Based on this pullback against this bear bar, I imagine that we're always in short, at least temporarily. So probably going lower. And then bar four, doji bar. We have a tight trading range, increases the odds that whatever breakout we get will end up reversing and pull back into this range. But I am more bearish than bullish, but not a very clear sell. I don't think it's a very great sell. It's better to sell than buy, but I don't think it's that good of a sell, so I probably wouldn't take it. And then bar five, bear breakout, pullback. The problem for the bears is that we have a big tail just above the moving average, and we have a big gap up. That's a big bull breakout. I didn't talk about it, but we can look at it real quick. This is the Globex chart. Make the bars bigger. Here's the Globex chart. Here's the high of the Globex range. What time is this? So this is the open of the day. So I always look at the Globex chart before my trading session to assess what I think is likely to happen as a result. So we had a tight trading range at the close of yesterday, and then we got this surprisingly strong bull breakout. And we channeled higher. We have three pushes up. We broke out of the top of the channel here. We have a small pullback and then another push up. This is climactic behavior, and it increases the odds that we get a deep pullback like this. This is what was happening right before the open. But we're clearly always in long, and we're above the moving average. This is the 30-minute time frame, so it takes 30 minutes for one bar to form, and it's likely that this bear bar is a breakout pullback, and we will probably retrace some or all of this tail over the next 30 minutes. That would be from 9:30 to 10:30. So increases the odds that we're probably going to go lower. We may not get below this low, but it's very likely that the market is looking to test that low. So that was my impression of the Globex chart coming into the day. And then back to the 5-minute chart. So I say that because if you look at the Globex range on the 5-minute chart, the low is right here, and the high is up here, the green line. And right where we are is about the midpoint. The midpoint of any price move is always significant and important because the risk for the bears is equal to the risk for the bulls. So whatever happens at that price is important. And what's happening right now is we're selling off. But it's not very strong. You know, the price has been mostly above the midpoint of the Globex range. So that tells me that it's not as bearish as it could be, especially given this tight trading range here. So I imagine because we're around the midpoint of the Globex range, because there's a big tail here, because we have a big gap up, and we're near a cluster of support magnets, you know, the highs of this tight trading range, the Globex low from the prior day, you know, the moving average, the low of 2, all of that is support. And I imagine the market will want to test the up near the open of the day. But at a minimum, I think the bears will get a pullback here because of the tail, and probably we'll find sellers somewhere in the upper part of the leg, and probably we'll have some sort of trading range open, but candidate for an opening reversal up. Bull bar, but likely a pullback, probably bears scalping out below 6 and 5, and not that good of a short. It could be 2 legs down. A 2-legged pullback after a huge bull breakout increases the odds that we go up here. So I would not be selling, and I don't think it's all that good of a buy yet either. Bar 7, a little bit better for the bulls, but still not impressive. Reasonable to think about buying, but I think the bulls need to do more. We're still below that high, and we have a lot of overlap here. So probably bears will begin selling soon and scaling into shorts. But the risk for the bears is that the bulls get another strong bar against them. And if that's the case, it's likely that we'll find buyers below 7 and buyers below 6. Right now, odds are buyers are below 7 and 6 right now anyways. And then bar 8, strong bull breakout, but big tail. Bit of a climax to me. Could be a leg 1, leg 2 implied measured move up. So it's possible that we pull back, but I imagine we'll find buyers below the lows. Are we always in long? I don't know, not clearly, possibly. Are we always in short? Maybe, and that's, confusing, and that's all right. That's the job of the market. So if you're not sure what to do, just don't do anything. I imagine the bulls get a second leg up. I imagine the bears get at least an attempt at another leg down, but probably more likely buyers below these lows. Breakout, bar 9, but I don't know. I think that there are probably buyers not far below. We're breaking out with enough strength below the low of 8 that the bears may get a pullback and a second leg down, looking to test near the low close on 5. So it's reasonable to think about selling and selling a pullback, but the risk is we get a higher low for the bulls and a new high. And if that's the case, that would change the picture for the bears. So I would be very careful if I were shorting here. Bar 10, we have a near inside bar. We barely broke out of bar 9. Increases the odds that we go mostly sideways here, and that's a problem for the bears. It tells you that the bulls are probably buying right here. And then we have a bull bar. Obviously the bulls are buying here. But if this is all the second leg that the bulls are going to be able to get, increases the odds that we go to a new low of the day. To me, I'm a bit more bearish than bullish, but it's certainly better to be selling pullbacks rather than selling the close of bars or buying the close of bars. It's probably better to be flat and waiting for a clear breakout. 12 sideways and then a bear breakout. 13, but again a tight trading range, lots of reversals, tails, overlap. Increases the odds that whatever breakout we get will pull back into this range and not get all that far. Probably bears get the breakout, but not very clear. And then 14, we're below the low close. Looks like we're looking for the low of the day, but this is not very good for the bears. We're channeling lower instead of breaking out lower. So that reduces the odds that we get much lower. So the bears really need to get some acceleration here. Otherwise, bulls will be buying, expecting a second leg up in a trading range right here. And that's what we have with 15. Bull breakout, but sellers above 14, as evidenced by the tail. I imagine buyers not far below. Still a bit more bearish than bullish, but it's reasonable to think about buying if the bulls get some good follow-through. 16, good follow-through, trapping the sellers above 14. Increases the odds that there are buyers below, and we'll get a second leg up. Probably the market is trying to be always in long, but it's still not all that clear. And then a doji follow-through bar. Candidate for a double top, but likely buyers not far below. Probably buyers down here. And then 18, bit of a surprise. We have a big climax. Increases the odds that we go sideways, but certainly a problem for the bears. Imagine selling the high of 17. You're now upside down on your position, and what are the odds that we get here before we get up here? So probably reasonable to think about buying, but a bit of a climax, so it's a bit dangerous. Also, you have a sneaky wedge. 1, 2, maybe 3 pushes up right there. Increases the odds of sideways to down, but more than likely we're always in long and probably going for a new high of the day. That's what we have with 19. The problem with 19 for the bulls is that this is the first breakout of the high of the day, and the bulls need follow through. And based on the climactic behavior here and the pause right here, it increases the odds that we get a deep pullback before we get much of a second leg. So it's reasonable to think about buying, but the risk is big, and based on all the selling pressure and the climactic behavior, the risk for the bulls is that we get a deep pullback. So it's better to look to enter on the pullback probably than buying the close here. Bar 20 is a good sell signal bar. It's possible this is a bad looking double top and this is a good looking sell signal bar. So bears will probably start selling it. It's the second leg up in what could be a trading range, so it's reasonable, but we're probably always in long. And there's probably bulls that bought here and are looking to buy pullbacks, so it's possible there are more buyers at and below 20 than sellers. The bears are getting a second leg down after a pullback. It increases the odds that this becomes a climax and we look to close the gap and test the 17 high to 18 low, but the bears need to get some acceleration here. For now, we're channeling lower. More follow through, pretty uniform bar with the prior bar. Increases the odds we go lower. Not all that good for the bulls. If bulls are buying lows right here, they may end up getting trapped. So I don't know if, for me, I didn't do anything in here. I'm flat and waiting for clarity because this is not very clear if this breakout is going to fail. It's not very clear if this is going to fail, so I'm just flat. We are right at support, the breakout of the 8 high right here, so it's likely that we'll bounce, but not terribly clear. And then channeling lower again, 23, we have 4 consecutive bars down against the bull trend, increases the odds that we're in a trading range, probably sellers above these highs, but the risk for the bears is that the bulls get another leg up. And if you look at what happened on Tuesday, we're at bar 23. Look at what happened on Tuesday, or was it Wednesday? It was Wednesday. So here's Wednesday. This looks familiar, doesn't it? We had a two-legged move down, a triangle, and then 2 big legs up. And then we had a strong reversal down that ended up being an endless pullback. Eventually, the bulls got a relief rally, but we actually ended up having a major reversal, and we trended down for the rest of the day. So, given that that's what's happening there, take a look at the chart here. It's not all that dissimilar. We have 2 big legs down. We have a clear triangle here, and we've got 1, pause, 2 big legs up right here. Now, it's possible this is part of a pullback, and the bulls will get another big leg up. But it's also possible that if they do get another push up, that we'll end up having another sneaky little wedge, and this could end up another bear reversal day. So better to wait, and for me, better to wait. Clarity, a bull bar, trapping the sellers above 23, but if we pull back, they won't be all that trapped. But increase the odds we get a second leg up, maybe buyers below, maybe sellers around the high close, the high of bar 20, but likely we'll get up there to find them. And then we tested the high of 23, found support, and we have another strong bar. It's good for the bulls, increases the odds will go higher. The problem is, what I just mentioned. We have 1 strong leg up, a pullback, and a second strong leg up. When we got to a new high of the day over here, we found aggressive selling. Now we're at another new high of the day. It increases the odds we find aggressive selling again. And here we are at the potential wedge top. So I think that we go sideways to up, but I'm not all that convinced that it's going to last all that long. We could get a midday reversal or some sort of reversal that creates a bear reversal day similar to Tuesday or Wednesday, whatever day it was. I think it was Wednesday. So 26, good for the bulls. Right here, 25, this is the breakout, needs follow through. And this is good. Here's the follow through from the breakout of 20. The problem is now we're breaking out of a wedge top. So now this bar needs follow through. So you can say it looks really good for the bulls, but with every new bar that we get, there's another reason to wait and wait for follow through, wait for confirmation. Because odds are we'll get a pullback. And if the pullback is this strong, what if we had a bar like 20 and then a duplicate of 20? That would completely change the context here. So it's not all that good of a buy, but it's reasonable to think about buying a pullback. We might be in the midst of a bull trend day. We have a double bottom, a wedge bottom. You could say the wedge is like that. It's a triangle. We got a big breakout, possible bull trend day, but climactic behavior, that's characteristic of trending trading range days. And then a strong micro channel against the trend here. I think that limits the upside. So probably sideways to up, but I'm waiting to see how strong the reversal is before I'm picking a direction. And then another bar up. We have 4 consecutive strong bull bars. probably going higher. Reasonable to think about buying, but I don't know. To me, I'm on the sidelines. This is too climactic and the risk is too big. The risk is that we test all the way back down to 24. 28 inside bear bar, probably going lower, but probably buyers below and a retest of the highs. And then third push up, maybe fourth. 1, 2, 3, 4, or 1, 2, 3. So we have a nested wedge top and it's parabolic. This is unsustainable behavior. But we do have gaps, I'm not sure if they will stay open or not, but if they do not, then this becomes a test target. So probably sideways here. And then bear bar 30. This looks like something like 20 and increases the odds that we go lower. Maybe buyers below 29, buyers below 28. You had bears maybe selling during 28, so we might bounce around this price. You could think about buying below it, but if this reversal ends up being strong and we get another duplicate of 30, you're probably thinking like, dang, that's probably not that good of a buy. And that's what we have with bar 31. Consecutive strong bear bars could be an implied two-legged move down. We have 1 pullback and 2. But I imagine we're looking for support right here. I imagine that this is going to end up a climax. The bears are really targeting the low of 24, maybe the low of 18, the bottom of the climaxes. Are we always in short? Maybe. I think we're at a minimum in a trading range, so there's probably sellers above, but there could be buyers right here. It's not unreasonable to think about buying here, but it's risky. So probably more sideways to down, but I imagine we bounce soon. And then bears have closed the gap. We had a gap between the high and low right here, and the bears have closed it. And the bears have also made more than a measured move down, of this sell-off here. So that's a huge problem for the bulls. This completely changes the picture. This is probably not a bull trend day. This is probably going to end up some sort of reversal day or trending trading range day. When you get strength like this against the trend, you're at a minimum in a trading range. We could get another climactic leg up from the low of 32 and get a new high of the day. But I don't know, to me it seems a bit unlikely. More likely there are sellers above 32, sellers above 31. But I imagine we bounce probably up to the breakout point up here for the bulls to let them out. And then 33 running out of steam, going sideways. We're right at support. We've got a line chart swing point right here. And we're barely breaking out below it, so it increases the odds that we bounce. But I imagine we go a little bit lower, and then a pullback and another push down. Parabolic wedge probably gets a second leg. We're back at the breakout point from the higher time frame, this purple line. So increases the odds that we bounce, but clearly there are a lot of sellers above it. So whatever bounce we get, likely to be minor. And then 35 happened. Big bull bar. If you were watching, this bar raced up. It raced up to here, pulled back a little, raced up here, and then just slowly kind of drifted down over the remainder of the bar. And it all took place, this bull breakout here took place in the matter of maybe 10 seconds, 5 seconds. And whenever that happens, that should be a warning that there's extreme volatility in the market. And it's possible that we get a second leg up that tests up to here, and even a measured move up. But it's also possible we get a measured move down, and this is the start of the second leg down for the bears. So for me, better to be flat right here. Maybe interesting to think about buying soon, but the bulls need to do more. Then we have 36, probably buyers not far below, but I imagine sellers not far above. And then 37, we have a tight trading range. Bears, good looking sell signal. There will be sellers at and above, probably scaling in higher. I think we might be always in short, but this is confusing. So we could find buyers right here. And we did, 38. Micro double top if we turn down on the next bar. Pretty good sell signal here, very likely sellers at and above. Bear bar, probably would go a little bit lower, but buyers probably around the 37 close. And then follow through, but we're bouncing below 35. Pretty good looking breakout. Odds are there are sellers above the highs of these bars, but I imagine there will be buyers scaling in lower, looking for a bounce. We're in a tight trading range, so we're probably sideways here for a while. It's the middle of the day. It's between 12 and 1 p.m., so that's often the time where the market is largely sideways. So that increases the odds that we don't really go anywhere. We kind of just go sideways for a while. So we probably go a little bit higher, but I imagine sellers above. And then bear bar, I imagine we go a little bit lower, but find buyers below. Second leg up for the bulls, double top with 38. I imagine we find sellers up here, and then we're trending down, but it's a small, weak bar. The bars are getting smaller, increases the odds that we go a little bit lower, but I imagine it's disappointing. And then second leg down for the bears. We could have a little wedge bull flag here. You know, if you look at this whole move up as one bull move up, then we have a wedge right here, wedge bull flag. So the bulls will be looking to buy it, expecting a test back up into this area. And for the bears, they're looking, this is a tight trading range where the bulls tried to get a second leg up from 35, but are failing to get to that high. And at some point, the bulls will probably give up. And it looks like they might be giving up right now. So I imagine we get a pullback, but probably there are sellers above 47. And then three little pushes down to 49. I imagine we go a little bit lower, but the problem for the bears is that every time we break to a new low, we bounce and overlap the breakout point. So probably what's going to happen here is we pull back to, at a minimum, the 48 low. And that's what we got with 50. Now, if we break below 50, I imagine we test the 50 low. We're channeling lower. We have a micro channel for 7 or so bars. Increases the odds that the first reversal up is minor. But the risk for the bears is that this breakout to the downside isn't all that strong. And we're getting close to support. We have a low close and low on 24, 23 right here. So it's possible that we find buyers here and bounce back up into this range. I think whatever breakout we get is very likely to pull back into this range. This is an area of agreement. You know, we've been in a box. We're in a box. So probably sideways to down. And then bulls trying to get a micro double bottom, but this looks like a pullback. I imagine sellers not far above. And then bears trying to get a breakout, but now we have a micro wedge. We have a reversal up here, and then here's the third push down. So we might have a reversal up. Pretty good looking buy signal bar, probably buyers below, but tight trading range and a weak bear channel increases the odds of sellers at the highs. And then 56, you know, we still have a reasonable looking wedge for the bears here. We have a lot of overlap with all the breakouts to the downside that we're getting. Increases the odds that we go a little bit lower, but I imagine that we pull back up into the range of 55 if we do break out. And now we're going sideways. I think that limits the downside. Pretty disappointing for the bears. During all of this mess, you should only be selling pullbacks, and you should not be buying. We're probably always in short. But I don't think we're strongly always in short. I think that at any moment we could rocket ship back up into this tight trading range. And the bulls are trying to do that, but they don't have the strength. They don't have the momentum yet. And we keep finding buyers with every attempt up that we get. Strong sell signal, but I imagine disappointing follow through. And trying to break to the downside, here's something important taking place. The bears have this very clear channel line, and we broke below it and pulled back up above it. That is a sign of exhaustion, climactic behavior, and if this breakout fails, we could easily test back up to the high of 52, possibly up into the tight trading range up here. So the bears, this is a very key moment. You know, if we pull back, we need to find sellers above and get a strong breakout down. Otherwise, the bulls may step up to the plate and buy aggressively, and we may end up back up here. Not a good start for the bulls, likely a pullback for the bears, but then we get 63, you know, no tail on the low, and we're moving away from the low close, increases the odds of a pullback and a second leg up. And now we have 64. Problem for the bears. You know, we have several pushes down, a lower low double bottom, 61.56, and now we're getting a strong breakout up and above the moving average. You know, this whole time that we've been trending down, we've barely moved 10 points down, and we've been trending down for a couple of hours. So odds are we test back up to here, and if the bulls are strong, we might accelerate up. And if the bears have been lazy, they may realize this late and be pushing the market up along with the bulls who are buying. And I think that's what's taking place right here. So this is very good for the bulls. It increases the odds we test back up into the highs of the range, at least to the middle of the range, at least to this purple line. But based on the momentum here, probably buyers below, and we get up here. Then 66 back up into the tight trading range, 4 consecutive bars up. Likely we go a little bit higher, but I imagine profit taking by the bulls soon and probably sellers up here near the highs of the range. We probably had buyers around the high close of 36, 38, 42, and they're probably disappointed with all of this mess. So they'll probably use this rally to get out. That's what we have here with 67, 68. I imagine we go a little bit higher, but this is a good indication that we'll probably be mostly sideways for the rest of the day. And then we're trending down, bar 70, 2 or 3 little legs down. I imagine we retest up here. We could get a surprise bear breakout down, but odds are there are probably buyers below these lows. 71 probably going up here, but then sideways 72, so likely sellers above if we get there. A little micro wedge here, 74, probably going a little bit higher, but probably sellers above. And then a lot of overlap with this breakout. Bulls need to get good follow through here. Increases the odds we go higher, but likely sellers not far above. And then possible climax 76, right around the trading range highs where the bulls got stuck. Maybe we get up here to the high of this bar, but maybe not. It looks like we have aggressive selling coming into the last minutes of the day. And then we're sideways. Man, really tricky day. I thought that this was difficult for the bulls. I really wanted to be a bull, but I was more bearish during the open until here. And then right here, I wanted to buy, but I really needed a pullback to buy. To me, not very safe to buy 16 after all this mess. I'd rather buy below 16 or on some sort of pullback. And I think that wouldn't damage the structure that bad. And then 18, 19, pretty difficult to buy given this climactic behavior, significant overlap, increases the odds we pull back. 4 bars, a 20, it's a good sell, but you're betting against this strong trend right here, and that's never a good idea. So I wouldn't buy that. 4 consecutive bars against the trend, very difficult to buy when that takes place. 24, I thought we would get more of a pullback. I was ready to buy the midpoint or below for at least a test up to here, but didn't get it. And then 25 was too climactic and needed follow through above the wedge top, so I didn't buy it. Wanted a pullback, didn't get it. And then 26, 27 climax, I'm not going to buy that, and I wouldn't buy 28. Likely that will go lower, but we didn't. And then this is nested wedge top. I'm not going to buy the pullback here. I actually made a mistake, and I did buy the pullback in here, but thankfully I was trading with my system parameters, and I positioned it reasonably enough that the market gods gave me a miracle, and I was able to exit. But through here, very difficult to trade, very difficult to tell if we're short or long. I think here it became clear, and then reasonable to sell pullbacks here, but you got to be quick to scalp out. And then here, I thought it was reasonably always in long and probably going back up here, but then you get 67. It's late in the day. Better to just let it go. We went mostly sideways anyways. So overall, the day structure is a bear reversal day. Bear reversal days begin as a trending trading range bull trend. And this is, that's reasonable to me. You could say that this is a bear trend that had a bull reversal that failed. So you could call it a failed bull reversal day. But to me, not a clear bear trend here. I think it was more so that the market was looking for support to rally. So therefore, I'm looking at all of this as a bull trend, and then the bears took over for the remainder of the day. So I'm calling it a bear reversal day. It's more useful for how I think about the market. So anyway, I hope that review was helpful. And if it was, please like, subscribe. Let me know how you're doing, where you're at, and I'll see you next time. Thanks. Love you. Bye.